Hi, my name is Syed Jafri. I'm certified in ICA, International Compliance Association, certified in CISI, and I take care of CISI vertical in FPA, Financial Planning Academy, EduTech. So today we will be talking about trade life cycle in OTC. I'm sure you must have watched my previous video on exchange trade life cycle, and I really appreciate your feedback and comments which we have shared in that particular video. Now talking about OTC, what is OTC? OTC means over the counter. Now the question comes, what is over the counter? What is this fancy term? And why it is used rapidly in the financial services industry? And whenever we say a profile is consisting of OTC financial product or contract, why it is required to be more vigilant to work into those profiles. Let me give you a simple example to explain OTC. We have Mr. A here. Mr. A wants to buy iPhone, let's say, and this iPhone is pricing at rupees 1 lakh. Now there are two options. This iPhone can be bought. Option number one, this can be bought using online available stores. It can be Flipkart. It can be Amazon. Now the other option which we have is the known retailer. Someone who is in a relation, someone who is a friend, someone whom we know from long time, where we have a relationship built from a decade. From there, if we are buying this same iPhone, this is, let's say, costing us 90,000 rupees. Along with that, they are giving us certain gifts. Now, this particular, when I'm talking, let's get back to the financial services industry. This area which you have seen, let it be Flipkart, Amazon, or other online stores, can we negotiate with them? My answer is no. Whatever offers they have displayed, we need to adhere as per those offers. Now here, can we negotiate with them? Answer is yes. It was priced as 100,000, 1 lakh INR. Now it is priced at 90,000. So we are getting same mobile with the 90,000 rupees. Along with that, they are offering us certain gifts as a gesture of the consistent buyer from them. This particular part is exchange, and this is called as OTC, over the counter. OTC is not any market. It's not a marketplace also. It's a transaction which is happening between buyer and seller, and someone is there to facilitate. Now, who is the facilitator? We call them market maker. When I say market maker, these investment banks or merchant banks, they act as a market maker. Why do they act as a market maker? Because they get money, they get revenue from this transaction. And the services which are offered by these, we call it bespoke service. Now we are clear about the OTC and exchange, the basic differentiation between both. Let us get into the OTC trade life cycle. Give me a sec, let me choose another color. Okay, so OTC trade life cycle. Before that, we need to understand what are the derivatives which are traded at OTC. And today we are talking about derivatives as a instrument, financial contract. So on the OTC, we have forward contract, we have options, and we also have swaps. Derivatives I'll be covering maybe in some other video or another video. Today I'm not covering derivative. Today we will be taking an example of plain vanilla forward contract. These are the different derivatives which are traded at OTC. So let's keep forward contract here. Now the forward contract will be something like this. buy forward contract. Let's say we are buying one contract, underlying asset is wheat and the quantity is 100,000 kg and the price is, let's say, 10 rupees per kg. This is our strike price. These are the different economies of the forward contract. Now, settlement, that is another important economy of the forward contract. So, this case, settlement is physical, which means we need to deliver the underlying asset to the counterparty. Let me erase it. Now we have the details. So we have quantity 100,000, 1 lakh, price 10 rupees per kg, delivery physical and settling on 3 months. These are the details which you will need for understanding OTC trade life cycle. So now the trade life cycle stages will remain same as you have seen exchange trade life cycle video of mine. So it will be front office, it will be middle office and it will be back office. Front office we have, first we have sales, then we have initiation, then we have execution and then we have capture. Please ignore my handwriting because I have a doctor's handwriting and blessed to have this because I used to get passed because of this handwriting. Middle office we have enrichment, we have validation, we have verification and we have another additional stage apart from exchange trade life cycle, that is affirmation. Now talking about back office, same as exchange trade life cycle, we have confirmation, we have settlement and we have reconciliation. Now we have the stages in front of us. Sales, in the sales stage, let's say there are two counterparties, one is A, other is B, okay? We have A and we have B. A in this case is a farmer and B is in this case is a producer. So B requires wheat after 3 months. B approaches A that I need wheat after 3 months. And A is like, okay, fine, I'll give you wheat after 3 months. Let's agree to the price. The price as of now in current market was 10 rupees per kg. We have agreed to the same price. It will be called as strike price. After 3 months, whatever the price on that particular day, let it be 12 rupees or 8 rupees, that will be called as current market price. This discussion happened, sales discussion, and they have involved an investment banker. We call it market maker. They have involved a market maker and market maker helped to get the contract drafted. They have signed the contract. When the contract is signed, that is called as initiation and execution. The reason I'm saying initiation and execution, in the initiation stage, they have discussed and they have agreed to terms and conditions. In execution stage, they have signed the contract. In the capture stage, they will be inputting details in the RMS. In the capture stage, the details are inputted in the risk management system to ensure that the information is flowing to different areas wherever we have our operations. Now talking from the middle office point of view, in trade enrichment stage, if you have seen my exchange trade life cycle video, you would have been aware that we calculate commission, we calculate fee, what we are charging, and we input other details such as custodian account details, and in this case we will be mentioning that the delivery is physical, economic and non-economic details. In trade validation stage, we will be validating trade, trader, client, counterparty. We have done the validation. This is as similar as exchange trade life cycle. In trade verification stage, we will be reconciling standard settlement instructions, this forward contract details with RMS, the details which were inputted here. We will be reconciling. Once that is done, we have another additional stage where the details which we have inputted are calculated in enrichment stage. We need to send those details to client in the affirmation stage. Why are we adding another extra stage here in OTC trade life cycle? That can be an important question, because in OTC market there is something called as ISDA. Let me erase this. One second. International Swaps Derivative Association. So to trade in OTC market, it is mandatory to go through ISDA master agreement. And this takes time. Like right now we have technology, we have automation, we have resources required. But back when things were not as easy as right now, it used to take 2 to 21 working days time to draft ISDA master agreement. Let's say that in this contract the details are like 100,000 kg of the wheat, and someone like me who is like really excited to work in the confirmation stage, and I'm like drafting ISDA master agreement. Rather than putting it 100,000, I have inputted 1 million quantity. Now we have 900,000 extra wheat which we need to buy as a market maker from client on the settlement date, because client will not agree to this. What will happen? Let's say it took me good 7 days. 7 days time to draft this ISDA document and send it to the client. After 7 days, the client is having T plus 2 days time. In T plus 2 days, in 9th day, client has come back that the quantity is incorrect. Now we need to see if in the market the price has increased, we need to bear the loss. If it is decreased, good for us. But if it is increased, we need to bear the loss. To avoid those operational risk challenges, we have another additional stage here, trade affirmation, where we will be sending economic and non-economic details to client on the affirmation stage. And client is having T plus 2 days time to confirm us back. Once the client has confirmed, our legal team starts drafting ISDA sheet. This ISDA sheet will be including your legal language and the details of the contract, the physical delivery, quantity, price, settlement, what all it includes. Okay. Now talking from once the ISDA sheet is, again we have T plus 2 days time to get this drafted and send it to client. Now the client has received the confirmation. Now settlement is slightly critical in forward contract or any OTC derivatives. Okay, it's not as vanilla as exchange traded derivatives we have futures and options. We have like regulated settlement system, but here in OTCs things are slightly different. The way things work are slightly different. So here the settlement will happen after 3 months. Let me make some space here. So settlement is happening after 3 months. Let's say on the 3rd month when the settlement is supposed to happen, this price has gone to 20 rupees per kg. Now the farmer can demand that I want 20 rupees per kg because this is the current market price. To ensure that there is no counterparty default, and after 2008 financial crisis, to ensure that that these global banks are not taking advantages of the client, clients have agreed to use a central player, and this is not a player, this is a service, CCP. central counterparty. What they do? SD minus 2, 2 days before settlement date, they'll agree to a nominal amount. Let's say if the total contract value TCV is 100 million, they'll agree to 90 million. Both of the counterparties will deposit that 90 million to their CCP, and this CCP will keep that as a collateral till the trade is settled. Once the trade is settled, CCP will return this 90 million to their counterparties, whoever have deposited, and they will charge certain percentage for this particular service offered. And in this case, the settlement is physical. At the end of the third month, we need to deliver them 100,000 kg of wheat in physical form. But what if this is cash? That I'll be covering in another video. In the reconciliation, we will be reconciling cash and position. Sticking with the same example, here position is not equities, which we are familiar about. Here position is wheat, the commodity which have been traded. This is the basic overview of OTC trade life cycle. Now, if you are fascinated with the front office, middle office, back office, I have worked in the trade execution department in Northern Trust. I was not sitting in US. I was sitting in India, in Bangalore. Don't be fascinated with the front office, middle office, back office names. Names can be different, stages can be different. Even if you are working in the back office, you are making equal impact in the industry, and we should be thankful to the industry to provide us an opportunity to make an impact in the overall economic development. If you want to learn more about OTC trade life cycle, exchange trade life cycle, if you want to learn more about derivatives or other financial products and contracts, we at FPA, we train for CISI, Chartered Institute for Securities and Investment London, Investment Operations Certificate, and I'm more than happy to connect with you in person and discuss how your career can be shaped. Thank you so much.